What's going on, guys? It's Jake here, and in this video I'll be talking about some investing secrets and tips that no one likes to talk about. But before I get into the video, if you enjoyed the video, definitely feel free to leave a like and also comment below some tips and tricks that you might have yourself. Other than that, getting into it. So like I said, some tips and secrets that I feel like a lot of people don't want to talk about because one, some of their own investing strategies or tips and things like that they actually use in their real life might not follow this. And two, these just might not necessarily be as popular and you might not agree with all of them. But again, this is just my opinion, but some of this is actually backed up by real data and real stats. But anyways, the first tip no one wants to tell you about investing is that investing can actually be super easy, but the biggest problem is that nobody wants to get rich slow. So this one is actually from Warren Buffett himself. He has been asked in interviews and things like that, and just overall, for quite some time actually, he's been asked this question, why don't people just copy you? Like his portfolio and a lot of the companies and things that he invests in is pretty public. Now, of course, not every company that Warren Buffett invests in you could invest in as just a normal everyday investor, but either way, a lot of people ask him, why don't they just copy you? Because he is relatively open with what he does, his investing strategies and things like that. And his number one answer to that is because no one wants to get rich slow. So if you actually take a look at how he accumulated most of his wealth, and if you're unaware of who he is, he's one of the best investors of all time. He's also currently one of the richest people on this earth right now. I actually don't know if he's still in the top 5. He should still be in the top 5 last time I checked, but either way, sometimes those places get moved around every now and then. But either way, he's still one of the richest people in the world right now, and his biggest reasoning for getting as rich as he was is because he was able to accumulate this wealth with the power of compounding interest over his entire life, and he is pretty old right now. So with him, his biggest reason is because people really want to just get rich quick. They don't want to wait and play the long game, which is really one of the best ways to succeed at the stock market. The next way, or the next investing tip that no one tells you about, doesn't even have to do as much with investing and picking stocks as it does with your overall finance. But this investing tip or investing strategy is to always have a separate savings account. So with this, I feel like I see a lot of people that get started into investing just jump right into the Robinhood app or M1 Finance or whatever it might be, and they just start depositing their entire savings account into that investment portfolio. Now, I don't necessarily think it's a bad idea to have a separate or use your investment portfolio as a sort of savings account. That's definitely not a bad idea. It's probably what a lot of you guys do, but you always want to have some sort of separate savings account, whether it's just a normal one or an emergency fund or something along the lines of that, so that you never have to withdraw from your actual portfolio. So that is a thing that I see quite some time when people submit their portfolios to me or ask them about stuff like that, things of that nature. A lot of times people's portfolios aren't actually going down in value because the stocks they're choosing are performing poorly. It's just simply because, their car broke down and they had to take out $500 of their portfolio because they didn't have enough put away in savings. So that would definitely help you out a lot with your investing and with just keeping the money in your portfolio. Next tip that no one likes to talk about, and the secret that a lot of people don't like to admit, and a lot of people try to do, especially on YouTube, and I think is a really foolish thing to do, is to try and time the market. So another investing tip that I try to do myself and I don't claim to be able to do is timing the market. So with that, I'm sure you see a lot of YouTubers talking about, buy-in points, or talking about certain stocks are up a whole lot on, things like that. But if they are claiming that they're, able to time the market perfectly and are able to make all these crazy good investments, they're probably misleading you in one way or another. Not to point out any specific names or anything like that, but if you do know some names, definitely feel free to drop them in the comment section. It's not me saying it, it's you. But either way, so trying to time the market, in my opinion, and a lot of really great investors' opinions, is a pretty foolish thing to do. There's a lot of people out there who claim to, be millionaires off day trading. I'm sure, everyone watching this video is a millionaire too. But either way, trying to time the market, just not a very smart thing to do. I think the smarter thing to do, and what I actually do, is just try to buy and hold, so that you're not necessarily timing the market but you might be timing it to an extent over a very, very long period of time, like 5, 10 plus years. And that is a lot easier to do, but trying to time it from day to day, month to month, or even just simply year to year is a pretty difficult thing to do. So not something I would recommend, but it is something I see quite a lot of YouTubers out there recommending. So definitely be careful with that. Next investing tip, or investing secret no one talks about is don't be afraid to buy the dip. So with a lot of companies out there and just with investing overall, golden rule, kind of rule of thumb is buy low, sell high. But I see a ton of people who kind of get afraid to buy low or buy when a stock is on the dip. Now, this kind of goes against what I just said before to, try to not time the market, but I think buying a stock at a good buying point is still an okay idea, but definitely not trying to do this on a day-to-day or like week-to-week, month, any sort of short-term manner. But what I'm talking about in this regard is people seeing a stock go down, maybe perhaps they had a couple bad earnings reports, something like that, but the stock overall is still pretty strong. It's still got a lot of good fundamentals. It's at a decent value and the price is at a dip. And a lot of people feel like they shouldn't buy the stock because they don't know when it's going to stop going down. And this goes back to the point I was saying before. You shouldn't be trying to time it, but at the same time, you don't be afraid to buy a stock on the dip, because I see a ton of people out there buying stocks at really terrible buying points at all-time highs, because in theory they're thinking, well, this stock's gone up 100% in the past year, it's probably going to go up another 100% in the next year, and that's usually not the case. But either way, don't be afraid to buy the dip. Sometimes it might be a little bit scary buying a stock that's down in the past year or 5 years, but a lot of the times you can make some pretty good money off of that. Next, investing secret that no one tells you, and kind of a tip that I should probably follow a little bit better myself, is to just keep it simple. So what I mean by this is a lot of people try to complicate their portfolios or try to really complicate a lot of their investments by either thinking too much about it or just digging way, way too deep into the company, into the financials, and, thinking that they're, gonna find like a gem in the rough, or like that perfect stock, or like that Netflix stock 10 years ago, or, Apple stock 20, 30 years ago, or something like that. So I think keeping it simple can really help you out in a lot of ways in investing. The first way, and I think an important way, is just simply to not make it too complicated and to allow you to actually just buy into the market. So by keeping it simple, you could do things like just buy S&P 500 ETFs, or just buy overall index/mutual funds. There's a ton of very, very broad and very simple ETFs out there that you could buy. Some that I personally own in my portfolio are Vanguard S&P 500 ETF, SPHD, which is an ETF that follows companies with high dividend yields, and then also Dividend Aristocrats ETF, and an ETF that follows high dividend yielding companies in the S&P 500. So if I was to have my whole portfolio allocated to that, that would be super simple. It wouldn't require a whole lot of work, and my portfolio would actually get pretty decent returns over the years. So keeping it simple, I think, is also another very important thing. One other thing that is kind of similar, or not similar, but kind of similar to the first point I made about not wanting to get rich slow, is to start when you are young. Now, obviously, if you're watching this video and you are older, I guess it really doesn't apply to you, but it's always better to start off young and start off as soon as you can, because of the power of compounding interest. So even if you just plug some simple numbers or some basic numbers into a compounding interest calculator, you'll always notice that even if you add just a couple more years to that, so when you're doing compounding interest, you always have to add time into the equation, and even if you add only a couple more years into that, it's always going to go up or increase a whole lot more over time if you're just adding just a couple more years. So starting early and starting when you're young and starting just as early as you can, I think, is also something that's pretty important, and that maybe not a lot of people talk about. Then last but not least on this list is an investing secret that definitely a lot of people don't like to tell you, especially some YouTube channels out there, as well as just investing, news sites, CNBC, a couple other ones, Jim Cramer, people like that, is don't buy into the news. And really overall, you don't really have to watch a whole lot of news about investing to still be informed. Now, I myself sometimes just simply like reading and watching videos about that kind of stuff just because it's interesting me, and it probably does for you too. But important thing to remember is that a lot of the news that they show on CNBC or Jim Cramer screening about, or whoever else, is usually short-term stuff. It's usually stuff that's very, very specific to certain companies, and a lot of the time it's stuff that doesn't actually impact how the stock is going to perform over the long term. So I think an important thing to note just overall with any news and that has to do with the financial field or just investing, the stock market, Wall Street, blah, 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 doesn't really matter, is that if you're investing in US companies, domestic companies, the country will continue to grow strong in the US. The economy is going to continue to be strong. You know, it's been good over the past 100 years or so. The stock market's been good. It's going to probably continue to do the same thing. So just because there's some bad news coming out, or, you know, like there's been recently a lot of things doing with Trump tweeting, sending the stock market down, or just things that Trump says or does with China or stuff like that, all that stuff's going to be relatively short term if you're thinking about it from a big picture perspective. So don't believe all the bad news you hear, and definitely don't be basing investments off news. But other than that, guys, it's really it for this video. I hope you guys enjoyed. If you have any other tips, tricks, secrets, things like that, definitely feel free to leave them in the comment section that I didn't mention in this video. And also, if you're new to the channel, definitely consider subscribing. I talk about the stock market, personal finance, entrepreneurship, things like that. So if you're interested in that kind of stuff and you are not yet subscribed, definitely consider joining in on the community. But other than that, guys, thanks for watching. I hope you enjoyed.